Welcome to another podcast of the Riffle series. The Riffle podcast series brought to you by 10 Leaves. Today, we are undertaking a deep dive into a really urgent and frankly, fast-evolving threat. The intersection of artificial intelligence, deepfakes, and the global fight against financial crime.
We have our hands on a pretty comprehensive and, I have to say, a slightly alarming document. It's a horizon scan published by the Financial Action Task Force, or FATF.
And for those who might not be familiar, the FATF is, well, it's essentially the global standard setter. They're the ones who lay down the rules for how banks and entire countries fight money laundering and terrorist financing.
They're the ones everyone in compliance listens to, that's for sure.
Absolutely. And this report, it lays out this powerful dual narrative. On one hand, AI is this incredible tool for improving compliance.
Right, it can spot patterns way faster than any human ever could. But, and this is the bad actors are using that exact same power as a new tool to get around the rules with a level of sophistication we just haven't seen before.
So the mission for us today is to really drill down into this source material, to pull out those key vulnerabilities the FATF has identified. We want to help you understand how this tech has really moved beyond theory and is already being weaponized. Okay, let's unpack this. And I think we have to start where the FATF starts, with the most immediate hands-on threat. Deepfakes.
So deepfakes are synthetic media. That's video, images, audio, all created using AI to convincingly mimic real people. Their voices, their faces, their actions.
It's basically digital impersonation on an expert level.
It is. And what's really crucial here, and the FATF sort of stresses this, is the incredible change in accessibility. This used to be, a very niche, very expensive tool.
Reserved for Hollywood or maybe intelligence agencies.
Exactly. Not anymore. That barrier to entry has just completely collapsed. Today, pretty much anyone with a decent smartphone and an internet connection can generate a scarily convincing deepfake in, a few minutes.
And that's what makes it a systemic threat to finance.
That's it, this democratization of the tech.
So where does this hit the financial system the hardest? I'm guessing right at the front door.
Right at the front door. Customer due diligence. CDD.
The basic know your customer check.
Precisely. If you're a regulated business, a bank, a broker, FATF. Recommendations 10 and 22 say you have to identify your customers using reliable, independent data. It's the bedrock of trust.
So if a criminal can just feed you a convincing deepfake video of a CEO or a synthetic ID that looks real, they're not just bypassing security.
No, they're exploiting the very definition of trust that the whole system is built on. That's the core vulnerability. And the FATF's Horizon Scan highlights 3 factors that are really escalating this risk right now.
Okay, what's the first one?
Factor 1 is our growing reliance on biometric verification. We spent a decade rolling out things like facial recognition and video-based KYC.
Which was meant to make us more secure.
Of course. But now it creates this massive new attack surface. Those systems are all built on the assumption that the user is a real, live person. A good synthetic video can fool traditional liveness checks.
So our best defense becomes a huge weakness.
It can, yeah. And that leads to the second factor. There's this persistent technology lag. The AI that generates the deepfake is evolving daily. But the AI that banks use to detect them,
that takes time. Training, regulatory approval, deployment.
Exactly. We're in a constant game of catch-up. A lot of the current anti-money laundering systems were built for a world of paper documents, not for spotting synthetic content.
And the third factor, I assume, is the global piece of the puzzle.
Cross-border complexity. Criminals don't just hit one bank in one country. They exploit the fact that while our financial system is global, our identity systems are not. They can find a weak link in one country to onboard a synthetic identity and then use that to operate globally.
Which makes tracing them almost impossible.
Exponentially harder. What's fascinating here is just how quickly this has become a really urgent operational challenge for banks. This isn't theoretical anymore.
And that operational reality, that brings us straight to what the FATF calls the dual-use threat. They pull analysis from Europol showing that AI is a crime multiplier because it works for 2 totally different types of criminals.
That's right. On one end of the spectrum, you have the low-skilled offenders. These are people using, off-the-shelf AI tools for simple stuff, mass phishing campaigns, basic scams.
AI just makes their low-level crime much more scalable.
It does. But then you have the other end, the highly skilled professional cybercriminals. And this is where the threat model changes completely.
Okay, how so?
Well, they aren't just running pre-made scams. They're automating complex, targeted attacks. They use machine learning to scan financial systems for specific weaknesses way faster than any human team could.
And they're using expert-level deepfakes, not just to look like a person.
But to replicate their entire digital fingerprint, things like unique browser behavior, how you move your mouse, your login credentials. They use malware to steal that digital DNA and then AI to mimic it perfectly.
To build a perfect digital clone.
Pretty much. One that can bypass even multi-factor authentication. And the report had this new example, typo-squatting attacks. It really shows how adaptive this is.
Right, this was about the AI coding assistants.
Yes. So an AI assistant like GitHub Copilot might suggest a plausible-sounding but non-existent software package name to a developer. Criminals monitor for these errors.
And when they see one,
They immediately create a real but malicious software package with that exact name and upload it. The developer trusts the AI, installs the package, and boom, malware is now inside their company's software supply chain.
a vulnerability built entirely on automated trust. Okay, here's where it gets really interesting, because we move from the theory to the hard evidence. Let's talk about that deepfake video conference scam.
This case is genuinely chilling because the sheer audacity of it. Criminals used AI-generated deepfakes to simulate an entire video conference call.
Not just a picture, a real-time interactive meeting with who you thought were your senior executives.
The C-suite, exactly. And they were convincing enough that the firm's CFO was instructed to transfer $25 million to a fraudulent account.
25 million. That's not a test run. That is industrial-scale automated crime.
And it bypassed multiple layers of human verification. The report makes it clear this isn't just a one-off, it's a methodology that's being replicated. And the second big case study connects this directly to virtual assets.
This was the securities fraud, the fake IPO.
Yes. The criminals created a deep fake news broadcast. It featured what looked like very reputable news anchors reporting on this fraudulent initial public offering. The goal was instant trust.
And I imagine the money came pouring in.
It did, and once they had it, the funds were immediately funneled into virtual assets, often using unhosted wallets to just disappear.
And the deepfake link.
When they had to open those virtual asset accounts, they used synthetic digital IDs, deepfakes again, for authentication. So it complicates figuring out who the ultimate beneficial owner is.
It's deception layered on deception. The deepfake creates the trust. The crypto creates the anonymity.
And it shows you why authorities are scrambling for better liveness checks and deepfake detection. It's a full-spectrum digital assault.
Okay, so let's zoom out a bit, like the FATF report does. Beyond just deepfakes, what does the broader spectrum of AI risk look like?
They categorize it by deployment style. First, you have what are called discriminative or predictive models. These are algorithms that are really good at finding and generating patterns.
And then you have AI agents.
Right. Autonomous systems that can make decisions and take actions without a human in the loop. And then way out on the horizon is general AI, but that's still theoretical. Let's stick with the first two.
So how are predictive models used to hide money?
The FATF calls it algorithmic pattern mimicry. This is really clever. Instead of making big, obvious transactions that would trigger a bank's alarm bells, criminals train their AI on huge data sets of legitimate transactions.
So they teach the crime to look normal.
Perfectly normal. It learns what a regular payroll run looks like, or supplier payments. Then it generates synthetic transaction sequences that blend in seamlessly. The needle you're looking for now looks exactly like all the other pieces of hay.
Which makes traditional detection almost useless. So that brings us to AI agents. When the source talks about these, it sounds like money laundering becomes fully automated.
That is the terrifying next step.
Okay.
And the FATF outlines a few scenarios. Scenario 1 is all about layering. A generative AI agent is used to create a completely convincing paper trail.
A fake paper trail. How good are we talking?
We're talking detailed, plausible fake invoices, complex contracts, email correspondence, everything an auditor or a compliance team would look for. The AI generates the entire backstory to make the crime look like legitimate business.
It's building the perfect financial camouflage. But what about the people? You still need money mules to open accounts, right?
That's scenario 3, the automation of mules and smurfing. The AI agent automates the entire recruitment and management of these straw account holders.
So the AI is like a digital HR manager for criminals.
That's a good way to put it. It coordinates thousands of anonymous accounts worldwide, executes high-volume microtransactions, that's the smurfing part, often through things like online gaming platforms that are hard to monitor. The scale is just enormous.
And the last one, scenario 4, this one felt different. It's AI as a sanctions evasion advisor.
This is a huge concern for governments.
Mm.
You have an agentic AI system that uses large language models to research and find the optimal, low-scrutiny routes for sanctioned goods and funds.
So it can analyze global shipping laws, trade agreements, regulatory changes, all in real time to find the perfect loophole.
Instantly. It operates faster and with more analytical power than any human compliance officer.
Yeah.
It gives sanctioned states and entities a massive head start.
This really does feel like a technological arms race. What does all this mean for law enforcement? What are their biggest challenges?
They're immense. First, you have evasion. Criminals are training what's called adversarial AI to specifically recognize and avoid red flags. So the reports we publish on how to catch them.
Become the training data for their AI to avoid getting caught.
It's a direct feedback loop. Then there's just the sheer volume. These AI agents can generate mountains of fake evidence, overwhelming investigators.
And then there's the legal problem, the black box issue.
Yeah, if an AI system's decision-making process is opaque, if you can't explain to a jury how it works, it can undermine the entire case in court. Prosecutors need specialized training just to explain the crime.
So what are we doing about it? What are the countermeasures?
The focus right now is heavily on verification. Financial institutions are adopting much more advanced ID tools, especially those enhanced liveness checks, to spot fakes.
And on the investigation side, it's about blending the old with the new.
Absolutely. Integrating traditional forensic accounting with AI-powered forensics, deepfake detection software, blockchain analytics. But the FATF is clear. Tech alone is not the answer.
You need the human element.
You do. You need qualified experts, specialized prosecutors, and really robust public-private partnerships. Banks often see the new criminal methods before law enforcement does, so they have to share that intelligence.
And we saw that great example of a bank using AI as a defense.
That's the other side of the arms race. A bank used an intelligent anti-counterfeiting system to analyze photos a business submitted as proof of their premises. The AI spotted that background details, like a light fixture, matched a previously flagged counterfeit document.
So it used AI to catch an AI-generated fraud.
Exactly, a perfect counter-audit.
So what does this all mean? When you boil it down, the FATF Horizon Scan is sending a very clear message. AI and deepfakes are fundamentally reshaping financial crime.
They're introducing unprecedented risks to identity verification, to CDD, to how we monitor transactions. The core conclusion is that constant innovation is the only path forward.
And the regulatory picture is still patchy.
It is. The EU, China, Singapore, they're developing frameworks. But there's no consistent global standard yet. We're still mostly relying on the FATF's Recommendation 15, which is a broad rule about new technologies.
We're in a global arms race, no doubt. The battlefield is digital trust.
And that leads to the final provocative thought that the report leaves you with. It mentions a crucial FATF roundtable is set for June 2025. But new AI tools are emerging daily, right? So the real question isn't if technology can keep pace with crime. It's whether our global regulatory and legal frameworks can evolve fast enough to avoid being exploited by systems that adapt in real time. For you, the listener, understanding that gap means that vigilance and your own critical thought remain the absolute last line of defense.